plenty of earnings conversations lined up as well, and Karur Vysya Bank is one of them. And the bank saw an improvement in its asset quality in the second quarter, although provisions saw some spike, while advances have seen a growth of growth on a sequential basis as well. To discuss the numbers further, we have B Ramesh Babu, the Managing Director and CEO of the bank, who is joining in. Mr. Babu, good morning. Thank you so much for joining in. Your loan growth has remained subdued this quarter due to corporate credit. Now, what kind of loan growth are you penciling in for the second half of the year, and what does that do to your FY25 number overall?
Okay. Yeah, good morning. Good morning to both of you. In fact, when our March results were out, at that time itself, we have mentioned that because there is some sort of a constraint on the low-cost deposits what we are getting. So we wanted to rebalance the portfolio. That is the reason we wanted to grow more on the RAM sector and to some extent to reduce the portfolio under the corporate sector. That's why if you look at the total portfolio, the retail we have grown by 20%. So corporate, we have consciously reduced it because low-yielding interest rate accounts are there. Those cases, we thought that the same amount, if you put it under the retail, the yields are better, NIMs are better. So that's a conscious call taken by us. As and when the normalcy restores in the liabilities front, so we will be back onto the corporate front, because there, going back, it's a interest rate sensitive, that one and all, we can go for that. So overall, we would like to stick to between 14 and 15 overall, but RAM will be the focus area under that.
All right. Hi, Mr. Babu. Good morning and good to see you again. So corporate, as a percentage of the book, I recall you had said it had come down from around 45% to the mid-20s. Where does it settle in at? And also earlier when you joined us, you told us for the year, the kind of loan growth you're looking at is close to around 14% with NIMs around 4%. You want to hold on to that guidance?
Yeah, as far as the loan guidance is concerned, I have conveyed. NIM is concerned, what a guidance we have given is for the next quarter, we will be around 4%. And the last quarter, it depends on the Reserve Bank of India rate cuts. If the rate cuts are there, accordingly, it may get moderated. Otherwise, we feel that the current trend may continue to some extent. We need to see. But we have a visibility as far as the third quarter is concerned. We will be around 4%.
Got it. And your loan growth will be 14%, right?
Yeah, between 14 and 15, but you need 14. To look at it in a different way that way, because the focus of the bank is on the retail segment. The retail Correct. Segment, if you look at it quarter on quarter as well as on the YOY also, we have grown by 20%. So there, when we are yielding good result. Second thing is, we do not want to stop the retail engine, because corporate engine, even if you stop it, again, tomorrow you go back to the market, getting back into the market is pretty easy. Whereas in the retail, if the staff, they come out of the business, it's very difficult to push them back. That is the reason we want to continuously pump the resources into the retail till such time the position improves.
All right. And the corporate book you were telling us, where does it settle in at? From 45%, it's come down to 25%. Where does it move?
No. Currently, if you look at it, it is at 16% now.
16%.
Maybe around 15% for the time being, but it may go back to 20% again once the CASA normalcy restores. The only single point Nigel understand. So if you are getting majority of the time deposits, and the corporates, if they expect 9%, and the margin at 7.6%, if you are accepting a deposit and CRR, SLR, if you pay for that, hardly not even 1% you will be getting there. You have to pay the credit cost, other costs, everything is there. So it doesn't make much sense. The same money you need to put it in the retail. Once CASA position improves, we will be back onto the corporate again.
Mr. Babu, your asset quality improved on a sequential basis this time around, but there has been a lot of concern over these unsecured loans and that having an impact on the asset quality of a lot of these banks. So part one of my question is, how much is unsecured loans as a percentage of your book? And B is, would that have any form of impact? Or are you seeing any form of stress on that front?
In fact, to provide you a comfort, I can very well say our unsecured book is 2.04%. Out of that, the presentation also shows 1,000 crores is in the Amazon BNPL, which is a tested business model which has been going on for the last 4-5 years. If you look at the cohort loss also there, it is between 2 to 2.5. We have an FLDG of 5% from the partner there. So that way, literally, I do not have any sort of a loss or delinquency which we need to bear from our P&L in the Amazon book. Then if I take out that one, hardly my liabilities, unsecured book will be around 200 to 300 crores. That is performing well. There should not be any issue at all in this.
All right. Very quickly, sir, if you could give us some guidance on your credit costs and slippages going ahead.
Yeah, slippage ratio, it will be around 1% annualized, but it can be lower also. So the credit cost is 75 basis points we have mentioned. But Nigel, here one more point you need to look at it. Credit cost on an organic basis, if I need to look at it, that may not be required. But we thought that when good times are there, we should not forget about the bad times. That is the reason sufficiently provisioning prudentially we have been making. That may look elevated credit cost, but it is not a real credit cost which can be postponed for a later date. But we are doing it today because the position is good.
Got it. And very quickly, if you could tell us your CD ratio as well as around 83%, where does this number stabilize at?
Yeah, it will be between 83 to 85. It will be ranging in that ratio.
All right. And yesterday, you had some moves coming in from the RBI where they're wrapping some NBFCs on the knuckles, Ashirwad. You have some co-lending models as well with NBFCs. Do you think that could, that could hamper your business?
No, we don't have any co-lending arrangement with these 4 NBFCs, what you have mentioned.
But any other NBFCs, since RBI could be coming down on the sector as well, or do you believe that your co-lending is safe? I mean, you don't see any risk to your business?
Yeah, co-lending we have with a reputed partners there and all, time tested that way. And that way our NBFC exposure also, which used to be 8.5, we have brought it down to 5%. Co-lending is also one lending arrangement is with Chola and another arrangement with someone else. Otherwise, we do not have many such arrangements. So that way we are relatively insulated.
All right, Mr. Babu, thank you so much for sparing time and sharing with us your views on the quarter gone by. Wish you good luck for the second half of the year.